Thanks for staying with us on SABC News. Now, China and Hong Kong stocks fell today as lingering economic worries and geopolitical tensions weighed on sentiment, with thin trading seen ahead of China's national holiday. So the Shanghai Composite Index declined 0.4%. Hong Kong's Hang Seng Index lost 0.9%. That's a 10-month closing low. And Japan's Nikkei lost 0.93%. Over in the United States, stocks ended higher on Monday, helped by Amazon shares and the energy sector. Investors also look to economic data and the Federal Reserve's policymakers' remarks later in the week for clarity on the path for interest rates. So the S&P 500 gained 0.40%, the Nasdaq Composite gained 0.45%, and the Dow Jones Industrial Average rose 0.13%. Closer to home, local markets are trading weaker today. The all-share index has declined by 1.2% to 72,493. The industrial 25 index is 1.6% weaker. Financials are down 1.3%. When we go to Europe markets, they are also trading lower. Britain's FTSE 100 trading flat. The CAC 40 in France has declined by 0.7%, and Germany's DAX has shed 0.7%. When we look at commodities, gold's trading at $1,911 an ounce, platinum at $912 an ounce, and a barrel of Brent crude oil at $92.67. The rand in the last hour trading at 18 rand and 98 cents to the dollar, 23 rand and 30 cents to the pound sterling, and 20 rand and 11 cents to the euro. Let's get some analysis on those figures. Martin Smith, a portfolio manager at Anchor Capital, joins me now. A very good afternoon to you, Martin. Let's go to the United States. How do the U.S. Federal Reserve, saying that rates may remain elevated for longer, impact their markets there in the U.S. and global ones as well?
Yes, I think we saw a little bit of risk off on the back of that statement. Two things. So firstly, they announced that they weren't hiking rates. Market fully expected that, but what kind of caught the market off guard was the fact that you're getting higher rates for longer. So the market initially thought that you'd have rates come down by about 1% kind of by the end of next year. That number is now around 0.5% that'll come off. So higher for longer, and also potentially another 25 basis points before the end of the year. So caught the market off guard, and we saw a little bit of sell-off on the back of that across the world.
Yeah, so we're going to go to the individuals, and I feel like we're going to be saying all the markets are down. But if we go to Asia, they are down. Why?
So again, on the back of that risk-off appetite that came from the Fed and the higher for longer rhetoric, but you also saw some news out of the property sector in China, which kind of pulled their market a little bit lower, as well as kind of over the last sort of 6 to 9 months, signs and data pointing to the fact that the Chinese economy isn't quite firing the way that investors would have liked. So you've got a few things working in the opposite direction that investors would have liked, and that's why you've seen that Chinese market and that Asian market kind of go a little bit lower.
Martin, that issue of central banks and rates is also affecting European markets. They've seen such a succession of hikes by the ECB. Take me through that market.
So again, sorry, and apologies if I sound like a broken record, but it is a very common theme, and it's not always the case that things play out in a very similar way. But it's that rhetoric of higher rates, higher yields, bad for stocks, and you've seen pressure on the stock market in the European zone as well. So no one's really immune to it at the moment. Obviously, you've got certain country-centric things that play into what the market does. But again, I feel there's a little bit of negative sentiment globally, even affecting the South African market at the moment.
Okay, so we had a public holiday yesterday, so our markets were closed. When they're open today and at lunchtime, what's happening?
So I think a little bit of catch-up. So again, you've seen South African market that's down about 1.3, 1.4 as we speak. And I think it's largely a function of playing catch-up to what's happened yesterday in offshore markets and kind of what's happening this morning in Asian markets and futures in the States before their market obviously opens up later this afternoon. So again, that negative sentiment, market doesn't know where to go. And I think we're very much affected by that. It's going to be very interesting to see where the next kind of leg is, if it's up or down. But at the moment, everything feels a little bit kind of stuck in the mud, and South Africa is not immune to that.
Okay. Martin, for the rest of the week, we are expecting some data internationally and locally around inflation, around trade as well. Take us through that.
So, I mean, even just the message that we've been speaking about today around the Fed and how much that's affecting markets just shows that how sensitive we are at the moment around data points, around macroeconomic prints. It's incredibly sensitive, and we're kind of headline to headline at the moment. So your question around what's coming up is important because it's very, very influential at this moment in time. And we're seeing GDP prints out of the States, out of the UK. We've got some I think PPI data out of the Eurozone as well. And locally, we also have some PPI data out. So lots of moving parts and lots of little bits of information that are going to move the market, I think, because like I said, at the moment, it's not always like this, but at the moment, we're very, very sensitive to macroeconomic headlines.
Okay, if we take a brief look at some company news, both locally and internationally, is there any company that you're watching that you think is exciting, any stock picks that you think you might want to share with us?
So, I mean, well, to look out for this week, we've got the Old Mutual results tomorrow, and we've also got results out of Capitec later in the week. So those are going to be quite interesting to see how their results are, specifically when we've seen some of the other insurers and banks report in the weeks preceding this, and to see how they line up against that. Insofar as excitement at the moment, I think it depends how brave you want to be, and if you want to call the fact that that negative sentiment we've been referring to throughout the show is going to kind of be sustained, or whether you want to sit on the sidelines. I think for now, I'm very much in a wait and see approach, and let's see where the market goes in the next couple of days.
Martin Smith, Portfolio Manager at Anchor Capital, thanks so much for your time.